has been charged $98 million in Japan. And why is that? Over incorrect tax exemptions. The tech giant failed to report bulk purchases from its stores and missed taxing possible foreign resellers. How exactly did that happen? Let me explain this. Foreign visitors in Japan are exempted from 10% consumption tax. Tourists staying for less than 6 months can buy souvenirs or everyday goods without paying the tax. However, this exemption does not apply to purchases for resale purposes. Any visitor who bulk buys goods and plans to sell them for profit needs to pay the consumption tax. And that is where Apple lagged behind. Foreign shoppers purchased iPhones in bulk at some stores. In fact, one individual bought hundreds of handsets at once, and this clearly indicated that he was a reseller. But Apple missed the point. The tech giant exempted him from tax and paid the price for this later. You see, stores are responsible for paying incorrectly exempted taxes. The seller is obligated to cover all purchases that should have been taxed but slipped through the cracks. And in this case, Apple had to make up for the wrong tax exempts. So who is at fault then? Apple for not monitoring its sales properly, or Japan's unique tax-free shopping rules? Now, reports say Apple Japan has filed an amended tax return. It halted tax-free shopping in Japan in June and confirmed that the service remains unavailable. $98 million is a hefty amount. Such unusually large back tax charges also highlight a glaring loophole in Japanese regulations. Let me tell you what I'm talking about. Consumables like cosmetics or pharmaceuticals under $3,744 are exempted from tax. But when it comes to general goods like home electronics, there is no such price cap. So when bulk purchases from resellers go unnoticed, they can incur huge losses for the seller. And Apple is not alone in this situation. Japan's 3 big department store chains have also faced a similar fate. They have been charged nearly $750,000 in unpaid consumption taxes. Inbound tourism and consumption are pivotal in Japan's growth strategy. Foreign visitors have a huge appetite for shopping, and that is reflected in Japan's economy. But improper exemptions serve as a loss for the government. They cost money, which the country needs to fund social security programs. Unlike Japan, visitors are required to declare purchases when they leave the country. Taxes are refunded to them at that point. No doubt, it involves cumbersome paperwork, but it is less likely to result in lost tax revenue. On similar lines, stores in European Union members send the refunds to the shoppers after confirming with customs. In other countries, this process is handled by government agencies. But Japan does not charge tax to begin with. It generates more revenue as foreign shoppers find tax exemptions attractive. But it also raises the odds of incorrect exemptions. Resellers get away without paying the tax, and the sellers are made to pay for it. On the other hand, there is nothing new about big tech flouting regulations. Avoiding tax and stifling competition has become the norm, it seems. The company already faces a far more significant tax challenge in the EU, talking specifically about Apple. According to the European Union, Apple owed some $13.1 million in back taxes to Ireland. It was earlier ruled that Apple had avoided taxation on almost all profits generated in the EU single market, but the decision was overruled and the appeal still remains pending before the European Court of Justice. WION now available in your country. Download the app now. Get all the news on the move.